Good morning, StockTwits Nation. It is Wednesday, September 24th. This is the Daily Rip Live. I'm Katy Perry, joined by Shay, Boloor, as always, and we have a super special guest. To open the show today, we've got Matthew Kinsella, CEO of Inflection, a really exciting company building in the quantum space. Matt, welcome to the Daily Rip Live. It's great to have you with us.
Katie, Shay, it's great to be here. I'm excited for this.
Yeah, we're pumped. I mean, Shay goes deep in quantum. I'm super curious about the space. I was watching my Yankees clinch last night, and I told my friends, I was like, I gotta go. We got a quantum CEO coming on the show. So it's great to have you. And on the news, Inflection entering a definitive business combination agreement with Churchill Capital.
Yep.
Company's valued at 1.8 billion and positioning to go public under the ticker INFQ. So tell us. We talk about quantum on the show a lot, and there's a lot of pockets of it, a lot of different things people are building, stages. Give us the quick rundown of Inflection, what you're building, where you guys fit.
Great. Well, first of all, congratulations on your Yankees clinching. My Cubbies clinched last week, so it's going to be a fun postseason.
Yes.
When I say quantum, sometimes it's helpful just to level set on terms, right? So when we say quantum, we're talking about the world of the very small, like very, very small, atomic and subatomic. And down there, a whole different set of rules govern, and they're called quantum mechanics. And when we say quantum or quantum technologies or quantum computing, it means we're taking advantage of some of those very strange properties, superposition, entanglement, you've probably heard these terms, and harnessing them to create products that actually have orders of magnitude improvement in performance relative to classical standards. And so I took a little bit of a strange path into quantum. I was an investor at a firm called Maverick for 18 years. And then I was actually the first investor in Inflection back in 2018. And I looked at all the different quantum modalities. And when I say modality, that means how do you take advantage of those strange and wonderful properties and turn them into products? And I ultimately met a gentleman named Dana Anderson at CU Boulder, who was the founder of Inflection and a pioneer in a quantum modality called neutral atoms. And what separates neutral atoms from other quantum modalities is highly flexible. So it's good for building a number of products, not just computers. And so we think atoms, which are at the heart of all our products, are nature's perfect qubits, but they're also nature's perfect clocks and nature's perfect sensors. So my initial seed investment thesis in Inflection was, can you build a quantum technologies company that wasn't a binary shot on goal to get a quantum computer that could do things that classical computers couldn't do, but actually following kind of the NVIDIA monetization strategy of, here's a quantum neutral atom engine. Let's point it at timekeeping first, because we can build clocks that have orders of magnitude, truly like 1,000 times improvement over classical standards, monetize those, move on to antennas, where we can actually build antennas that have 1,000x improvement relative to classical antennas, all while marching towards that crown jewel of a gate-based fault-tolerant quantum computer that can do things that classical computers can't do. So that's a little bit of a long-winded answer to your question, but we were selling a lot of different products. We did $29 million in revenue last year. And I'd say leading the way towards quantum advantage on computing.
Yeah. Quick follow-up on that is, you mentioned the NVIDIA example, maybe a different sort of business model than some of the other people in quantum. Can you just double click on that really quickly? When you make the comparison more like an NVIDIA, what is that more like or less like compared to some of the other quantum names out there?
Sure. Well, it behooves everyone to compare themselves to NVIDIA these days,
Yeah.
right? But what I mean by that is, here's our quantum core. So this is a neutral atom core. It sits at the heart of all of our products. So if you were to open up our clock or open up our computer or anything in between, you'll find something similar to this. And inside this live millions of atoms. And so what we do is we point this neutral atom core and we turn those atoms into different products. So we can, in some senses, we can turn these atoms into clocks. We can get into the specifics on how we turn atoms into clocks. And unlike other quantum strategies, which is use that core only to build a computer and not really focus on anything along the way, in the NVIDIA analogy, let's say that would be like they built the company in 1993 and then never sold a GPU until the large language model opportunity came along. Instead, they pointed that GPU at the gaming market to start, then the crypto mining market, then the physics market, then ultimately their crown jewel of the large language model came along. We're pointing this quantum core at the timekeeping market, the antenna market, the sensing market, and ultimately the crown jewel of quantum computing that is advantageous to classical computing will come along, and we'll be ready to monetize when that becomes commercially monetizable.
Fascinating. That makes a lot of sense. I'll let Shay jump in, because Shay, this is really interesting. I'm curious your thoughts, how it compares to some of the other quantum companies that you so closely track.
I mean, before we get into that, I do want to also talk about the theme itself, because a lot of people see quantum, especially in the public markets, just absolutely running hard,
Yes. Yeah.
10xing, 15x,
Yeah.
20xing. So you hear quantum bubble all the time.
Yeah.
Do you guys remember what a bubble really looks like? I'll remind you, SPAC bubble for EVs alone, hundreds of billions of dollars of market cap among that group. We're talking companies that a lot of new investors don't even know, because guess what? Niccolo is one. CEO went to jail, and I think they're now in the millions market cap. Fisker, are they even public anymore? Canoe, like all these names, Lucid, Rivian's good, but like there's a lot of tier 3 names that just were worth $20 billion. This quantum group, including Inflection, is now, that whole bucket's like maybe $30 billion, if that's. This is not a bubble. So I want to classify, like, I get it. The stocks have ran up. There's certain companies out there that should not run up with it. I'm talking QUBT as the ticker specifically. That's not really a quantum name, guys. But either way, I think it's really important to know it's not a bubble. We are maybe very early, but it's not a bubble. And so now let's talk about quantum in general. So I do think that's the big theme here is like, why quantum, why now? And I think that in order to realize why is, let's talk about AI first, because everyone, as you agree with me, like quantum's next derivative after AI. It's the next theme. It's not about if, but when. And right now, AI still runs. People are surprised, but AI runs on the same kind of computers that we've been using the past decades. The only difference is we have faster and more GPUs thanks to NVIDIA, but there's a ceiling on how far we can go. And that ceiling is going to hit eventually. Quantum is what comes next. So for you specifically, knowing that maybe we're years away, but there's ways to kind of progress from point A to point B, like what's some specific initiatives that you guys are doing right now where you can get immediate revenue and don't have to like dilute and see what your big rocks are? Because I know for like IonQ specifically, they're trying to become a prime contractor, clearly, with all these acquisitions. They're trying to get some dollars until the hardware catches up. What's your strategy?
The strategy, going back to the NVIDIA analogy, is to really monetize. I say it, colloquially, let's take what we have on the truck today and sell it, and then let's drive that truck towards the future, which is quantum computing. And so we've sold, an $11 million contract of our clocks to the DoD. We have actually sold 3 quantum computing units, one to the UK government, one to the Japanese government. We just announced a big deal with the state of Illinois. So there is a market to sell quantum computers today, even though they aren't yet commercially advantageous relative to classical computers. So really our strategy is to monetize how we can, where we have commercial advantage in the timekeeping and the sensing umbrellas. And I do agree with INQ strategy in that a lot of the dollars being invested or used to purchase quantum products, whether it's sensing or computing, do come from that national security umbrella. So having a relationship with the government is indeed very important. The DoD and the Ministry of Defense are our biggest customers. So core to our strategy is sell what's on the truck, generate gross profit dollars, use those gross profit dollars to invest in the R&D to scale up the computer to the point where it's commercially advantageous. What are we doing in AI? There are a lot of overlaps, as you point out, between quantum and AI, and some of those we are monetizing as well. People talk a lot about AI running out of training data. One thing quantum excels at is creating synthetic data to train AI models to make them sharper and better. Quantum sensors, the kind that we make, have orders of magnitude improvement in sensitivity, bringing new levels of data that you can then pump into AI models to train them. And then finally, the underlying math of quantum and AI is very similar. It's matrix math. It's good at different parts of that mathematical classification. And so the way I see the data center playing out in the future is you'll have CPUs, as you've always had CPUs. You'll layer GPUs into that as they've been layering in over the last decade, and increasingly QPUs will come into the data center. Problems will be sent into the data center and hived off to the appropriate part of the data center for that problem set. So I don't actually see quantum processor units or QPUs replacing GPUs or even CPUs. They're going to expand what we can do with computation, because as you point out, at the end of the day, even the most powerful GPU cluster is boiling everything down to a 0 or a 1, right? It's all binary logic. And it's incredible what we can do with that binary logic, but that's fundamentally not how nature works. So if you want to model nature systems, which is massive market opportunities, whether it's drug discovery or developing new materials, You just can't do that with the binary classical computing methodology. You need to use the way nature actually works, and that is quantum. And so that's the types of problems that quantum is really going to help, and it's going to turbocharge AI.
Great answer. I appreciate that. Another one I want to bring to your attention is, have you noticed any kind of sentiment change since March? And what happened in March was the tariff wars and I think the geopolitical tensions. I think AI and quantum is a national security spotlight, clearly, because it's an arms race. The world's going to change potentially in 10 years. If China conquers quantum, doesn't really matter what they do for AI because quantum is the next derivative, and that's going to be very disruptive. Do you sense any kind of more? You said the national security component for DoD allocating towards quantum. Like, do you see that like being more aggressive in the past 5 months than it was like the previous couple of years?
Yes, is the short answer. Quantum has been for years and is increasingly so a national security issue. And the sensing products actually for a couple of years at this point have been able to have huge improvements in performance. So there has been a national security concern and actually a huge boon to national security if you can deploy these sensing products. Let's use GPS as an example. GPS is increasingly becoming susceptible to denial and spoofing. Our quantum clocks and our quantum sensors can actually help you wean off some of the core services that you get from GPS, like precision timekeeping or inertial sensing. So you could navigate in a battlefield in the absence of GPS. So the sensing products have actually had huge national security implications for a couple of years at this point, and that's why we've been monetizing with the DoD based upon that underlying threat of GPS denial. I think what people are seeing though, and why quantum is actually becoming much more noticeable, is that quantum computing is actually getting closer to being commercially advantageous. And the big change was in 2023 when the world first got logical qubits. Logical qubits are really all that matter for quantum computing. Pre-2023, before logical qubits were showcased, it was unclear as to whether quantum computers were ever going to get there. But now that the world has logical qubits, and we showcased our first ones back in 2024, we're one of a few companies that has logical qubits. We just announced we had 12 last week. Once we get to 100, you'll start to see commercial advantageousness relative to classical computing. And then as you grow that from 100 to 1,000 to 10,000, this grows double exponentially. So the power really, really expands. And so I think that's why you're starting to see people wake up that, wow, we need to get ahead of this. And make no mistake, it is a race. And there are huge national security implications. China is out investing the US, and in some places they are ahead. But I'll bet on the US's innovation engine any day to win. And that's honestly one of the reasons why we're going down this path, is to make sure we are capitalized to help make sure the US maintains its leadership. I think it's really important that the US and our allies win this race.
No, I totally agree. And I think a lot of people share that sentiment. And going off of like the sensing part, I do want to call out like that is the lever that you should be, a lot of people, this, but I'm telling the audience like that they should be pulling, because it doesn't require a breakthrough in the computing for them to commercialize that element of quantum right now. And I know that because IonQ has acquired, what was that company? Vector Atomic, I think it was. I think that's their sensing. How is your strategy different than Vector Atomic is my question. Because I know more about that, less about like, now you guys are about to go public. I'll learn a lot more about you guys, but how is the different strategies between the sensoring between you two?
So Vector is still another company. Will soon be part of IonQ, company that makes quantum clocks as well as some other quantum sensors. The underlying technology is relatively similar. Our strategies differed quite a bit. As I understand it, Vector had never taken any venture capital investment, and so they were kind of doing SBIR contracts with the DoD, making good clocks, but never with really a scalable approach. It was more doing those types of contracts. Again, I'm not an expert on Vector Atomic, but I did know them and had respect for them. So if I look at what IonQ is doing, in many ways, that looks like they're trying to become Inflection, but doing it sort of the opposite way, in which we were, deliberate in building these technologies and starting with sensing and moving to computing. They're kind of backing into that with, starting with computing, and now with a large market cap, acquiring companies that can also give them revenue in the sensing market in the more near term.
So another question I have, like, the CEOs I've been talking to, a lot of them, surprisingly, in the private ones, don't want to go public. They don't feel the need to, because they're executing privately. They're doing the business deals. They don't need the cash, but they feel like the urgency. they have to because they see their competitors in public markets gain multiple expansion. Market cap, like you just mentioned, gain bigger and bigger, like IonQ. $20 billion company now. So they have the luxury of acquiring these private companies at a much lower valuation because they are maybe more fairly valued. Do you feel that urgency right now going public where you kind of need to like pay up for specific talent to get into the company itself because maybe an IonQ is overpaying more, or just like, what's your specific reason on why now you guys are going public?
Why now? Well, first of all, because I think whether it's Google, NVIDIA, big companies are now focusing on quantum. You've seen, the movements in the public markets, and then this race with China. I mean, quantum's at an inflection point, and so the time, just broadly speaking, is now. Why in particular did we go down this path? We did a Series C back in early last year. We raised $100 million. We were very well capitalized. Our burn rate is really a fraction of most of the other quantum companies. We burned about $30 million last year. So we were very well capitalized relative to our burn. And as you point out, a lot of quantum companies want to stay private because then they can build in without having to take on a lot of the things you have to do when you're a public company. The reason I went down this path is I thought to myself, okay, what can we do from a position of strength to really set us up to play to win? And if you look at what the public companies are doing, they have access to capital that's orders of magnitude that you have in the private markets at costs of capital that are a fraction. And so, in my view, you don't ever want to be the undercapitalized player in a market where people are building war chests. So really the first reason to do this was I looked at from a position of strength, while we were well capitalized, was there a way to really change the game? And my first principle was, could we find a wonderful partner to do that with? Churchill has been at this for many, many years. They've done many very successful SPACs, most recently Oklo. And in particular, they have an incredible track record of actually delivering the cash and their trust onto the balance sheet of their partner companies. So I felt like we actually had a pretty high probability of this working. Just to increase the probability, I raised a $125 million pipe alongside this SPAC transaction to A, get more capital into the business, but B, give a signaling mechanism to the world that very good institutional investors were investing on these exact same terms as we were taking the company public. And so really, why now? It's to get the capitalization level that we need to play to win. And also, I think when we have this liquid public currency like INQ and others have, there will be private companies who think they will always be able to raise, but the markets aren't always accommodative. And you might find yourself in that existential crisis where you are running out of cash. You don't have a business model that gets you to cash flow profitability. You aren't able to raise in the private markets. Well, Inflection will have a liquid currency to make acquisitions if and when those meet and exceed or accelerate our technology roadmap. And so I think there's a lot of reasons to do this.
Now, before I pass it to Katie, listen, I think you absolutely should, especially when you see companies like Quantum Computing Inc. that are worth $3 billion. When you guys are a real business that have the sensory and you have the deals, and I think you guys are going public actually at a less valuation than that via SPAC. So yeah, I mean, I think a lot of quantum computing companies are probably going to be following suit to what you guys are doing right now after seeing the craze. And we aren't in bubble territory yet, guys, because I do think there's inevitability on quantum. Actually, one more question before I pass it to Katie. Putting it in the corner, do you think the reality of quantum actually disrupting blockchain is something more that's going to come to light and then closer than people anticipate? Or is that just more of the TradFi people just being upset they missed out on the crypto run and just want to claim something's going to happen?
Well, okay, so I'll caveat this with saying I am a reasonably large holder of Bitcoin and some other tokens, but I do think that over some period of time, it's not going to be 2 years, it's not going to be 3 years, but maybe 5 to 10, quantum will be able to break some of the encryption algorithms that are used to secure Bitcoin in particular is the one that is susceptible. And actually, you'll probably be interested in this. Last week, we put out a really pretty impressive application where we ran what's called Shor's algorithm on logical qubits. The first time it's ever been done. Shor's algorithm is the quantum algorithm that can break decryption, because modern day encryption is based upon a fundamental inability of classical computers to factor a large string of numbers down to their 2 prime numbers that when you multiply them together, it gives you that long string of numbers. It would take a CPU like 1 trillion years to do that, a GPU like 75 billion years, and then a quantum computer like a week once it gets powerful enough. And so we factored the number 15 down to 5 and 3. So we're not breaking encryption anytime soon. But what it showed was a scalable way to make that algorithm more powerful, Shor's algorithm, which we use to decrypt it or to factor a very small number. But as we add more logical qubits to our system, that same algorithm will scale in power, and probably around maybe 1,000 or more logical qubits is when you'll be able to actually perform that calculation, which would put Bitcoin at risk over time. Now, there are a lot of very smart people operating in the blockchain world. I'm guessing they'll figure out a way to fork it to make it quantum resistant. But I've heard it would take 80 days of downtime. There was an interesting paper put out from the University of Kent talking about what would actually have to happen to make the Bitcoin blockchain quantum resilient. And it will be challenging. But again, I wouldn't bet against the geniuses who are operating in the blockchain world. And there's too much at stake, right? I mean, it's trillions of dollars of market cap. But there is a fundamental risk. Yeah, like the Shor's algorithm, when run on a quantum computer that's powerful enough, will break the encryption algorithm that secures Bitcoin.
Wow.
Fascinating. It's great to have the nuanced view of someone who's deep in quantum, but also, I also have a lot of Bitcoin. I think they'll figure it out eventually. I'm so generous with your time today, Matt. A couple more questions for you before I let you go.
Absolutely.
One thing we've been talking a lot about in the show is these larger companies, and within AI especially, kind of investing in each other, business partnerships, or the entanglements between your OpenAI or NVIDIA. Like as you go public, in terms of strategic investments from larger players, would that be something that would make sense for you guys down the road? Would you be open to something like that? A company like NVIDIA taking a stake in your business?
It would all come down to, Katie, whether there was industrial logic for the partnership and whether commercial reasons to do so. And so certainly not opposed to it. And we have a very close partnership with NVIDIA. They're wonderful to work with. And so if investment made sense in the context of deepening that partnership or accelerating go-to-market activity with them, then I certainly would consider it. But right now, I'm very pleased with the way our partnership's playing out, without investment. So yeah, short answer, yes, if it made sense from a commercial perspective.
Yeah, and then last one for you. I mean, you're obviously here on our show, and it's really interesting to see sort of the maturation of retail investors in terms of their sophistication around these topics, even grasp of AI concepts 6 months ago to today. Just as we talk about it more and people explore more companies, what is sort of the strategy for getting out there and in front of retail investors? We talk a lot about open door. There's sort of the gimmicky tactics. Let's go stand outside of Drake's house. I think you've done a good job today of kind of educating around the space generally as a way of getting the company out there. But how do you think about that? Like educating these large, massive investors who, these concepts are very, very technical.
Well, I think I will probably, quantum is I'm not a very gimmicky person, so I probably won't be doing too many gimmicks to get the word out there. But I think conversations like this, just explaining what we do, trying to actually explain what is quantum at the most fundamental level and why does that matter for humanity. And if the retail investment community wants to have exposure to quantum, now there are actually opportunities to buy equities that are quantum companies. And I think if you take a 10-year view, it's probably a very important, I feel very convicted. I've, left a great job at Maverick to come here and run this company full time. It will be a very important technology for humanity. And so as I learned as a fundamental equity investor, never give stock tips to friends. But if I were to say one thing, if you're interested in quantum and it's a 10-year horizon, it's not a bad idea to put a little bit of capital in there I mean into quantum companies in general, and see how it plays out over time. And take a very long-term view on it. So I think what I'll be doing is just educating folks on what quantum is and what Inflection is, and letting the very smart retail investors make their choice as to which companies they want to back.
All right, Matt, thank you so much. Of course, we have Matt Kinsella, CEO of Inflection, fellow Notre Dame alum. Go Irish.
Ready to go Irish.
Let's go. We're going to run this
run
straight to the end.
And we'll be back in the playoffs.
We'll see you there. Thank you again. You have to come back sometime. This was lovely.
I would love to. Yeah, thanks for having me. All right. Great to meet you both.
All right. Thanks, Matt. And with that, we are going to bring in Bruni, Tom Bruni, of the editor-in-chief of StockTwits, master of the news cycle, Fox Business. He's in Dubai. He's here. He's there. He's everywhere. Tom, what's going on? What's new with you?
Thanks for having me. Yeah. Oh, geez, I lost my voice, but Yes, I'm on Long Island for another couple days, and then I'm off
Okay.
to Dubai for the CMT Association's Global Investment Summit. So excited for that. But yeah, let's
Wait,
talk some retail trends.
are you gonna jump out of a plane in Dubai?
I'll be honest, I haven't really figured out what we're doing. I booked the hotels, and I'm like, I'll figure it out when I get there.
Wait,
It's
is
been
that a
busy
thing? Is
couple
that
weeks.
what people do in Dubai?
Oh, it's the number one spot is to go jump out of a plane because they have this amazing. I forgot what that thing is called. It's like the little dangly. It's like one. I went there. That was the first. That was the first and only time I'm ever gonna jump out of a plane. Was in Dubai.
Oh, right. Okay.
It was.
Yeah.
Did you feel safe doing it? Because there's a couple like skydiving places out on Long Island, but I think they've had a couple issues here and there.
Well,
over
I
the
think
years.
they have probably the world's best talent. I feel like as instructors there because it's like the mecca. I will say I was supposed to go with my mom, and my mom backed out on the floor mat of the flight, and I had to
Smart
go.
woman.
Yes, she was smart, but also fun fact: if I weigh 190 pounds, I was the heaviest person on the plane, and I had to go first because the heaviest goes first, and that sucked.
Oh,
I was right when they
no.
opened the door. It was up. It was me, and I was just like, "This is brutal."
Yeah,
Oh,
but that
man.
might be better than waiting and watching everyone else. But I would never jump out of a I know myself. I put myself in a lot of scary situations. That was one I would not put myself in. But Tom, you
I-
should do it.
Yeah, that was not even on my radar, but I will have to do some research now. I would rather do that than bungee jumping. I don't trust a little string or whatever it is to hold me up. So
Yeah.
I also don't understand the enjoyment from bungee jumping. It just doesn't. It's a rubber band. It's just like you're not. There's no views. It looks like the worst case scenario. You trip on a bridge and you're about to fall. Like, why would you replicate that?
yeah, I think it's just the thrill of it, the thrill
Yeah.
of falling, free falling. People like it. But yeah, I'll opt for the parachute, and I'll
All
keep you guys
right.
updated. Maybe I'll send you a selfie from the
Do
from
it.
the plane or something.
Do it. Stay safe. And before you go, let's check in on everything that's going on. I mean, we got a reality check from Powell yesterday. He was making comments. Retail investors were chattering about that. I also just saw Sam Altman is tweeting again. He tweeted something. He's like, "Hi." And then the next tweet, he was like, "Oh, by the way, this is Sam's friend. Sam's in jail.
Oh,
Sam would never
wait,
tweet from jail."
Oh,
not Sam Altman.
Yeah,
SBF.
Yeah.
Sorry. Yeah,
I was
Sam
like,
Altman.
oh man,
Sam
that's
Altman
been
is not
quick.
in jail, guys. That would have been a breaking news. We would have had like a banner. Thank you, Shay. Sam Bankman-Fried and Sam Altman, though, betting $1 trillion on AI infrastructure. So there's a lot of Sam content. But Tom,
Yeah.
we're halfway through the week. What's popping in the community?
I mean, what's not popping? I mean, it's a lot going on. Quantum stocks, obviously. We've got Open Door continuing to trend. Now we've got Better Home and Finance. So people, again, are just looking for these pockets of momentum, and they're finding it kind of all over the place. One thing that I'm seeing an uptick in chatter about is just gold, like to levels I've never seen before in terms of people being interested in gold. To me, that's kind of like a sign that this trend is getting a bit long in the tooth. I mean, gold miners are up at this point like 130% year to date. Gold is approaching 4,000. So I think a lot of the themes that have worked so far this year are gonna start to teeter out a bit or peter out. And so yeah, people are just looking for other opportunities. I'm seeing some chatter about industrial stocks, energy in terms of oil and gas is trying to catch a bid. So yeah, people are just looking for diversification at this point. Again, the theme has been just jumping from area to area, whatever's hot at the moment. One thing I did notice when I was doing some research, like Western Digital and STX Seagate technologies they're up like 4x, 5x since April. Shai, I wanted to get your thoughts on those because I know they make like memory stuff to support all this data infrastructure, whatever, but like, wow, what a move. Was this something even on your radar?
I mean, it's not on my radar, but the sentiment from the people channel checks we've been doing at Futurium, it's just like the AI pie is just so freaking massive, and everyone's going to be eating, like everyone in the infrastructure hardware space. So when you look for a company that maybe isn't being priced as an AI beneficiary, I think it's every single one of these names will get some kind of tailwind, reacceleration, or renaissance. And Western Digital, 20 times earnings. What I don't think they're being priced as an AI, any kind of AI beneficiary. Same in Texas Western. I think that memory also, you just saw it in Micron's earnings yesterday, where it was like, yeah, stock price might not be reacting accordingly, but that was an insane print. And I think that for Micron, you have to specifically zoom out and see what happened leading up to his earnings. But it showed that there is somewhat of like, you have to be, AI is taxing the memory stack, if that makes sense. And I think that the AI everything build out, that's what I mean by all infrastructure names are going to benefit, because it's really called an AI everything. Like, you have to build out everything that wasn't AI to become AI, because AI will structurally change every industry going forward. That's why I think you're seeing these names catch a bid. But yeah, I would not be short SMH, guys. Like, I really think that Semiconductor is like, this is what Lisa Su from AMD and what we're seeing, a lot of people are saying this is like year 2 or 3 of a decade-long build-outs. Like, we are so early still.
Those companies you referenced, Tom, the Texas Western and the other, those go head-to-head with Micron? Are they, or Shay also? Are they?
Sorry, I probably misspoke. They're not competitors with Micron.
Okay.
Like, Micron's Samsung is like the competitor, but it's like a tomato in the memory kind of thing. Yeah.
Okay. Well, Micron, I mean, their revenue's up 46% year over year, and their net income surged to $3.2 billion. That's triple last year's profit. So definitely watching the semiconductor stocks over there. I mean, with Micron kind of positioning itself as the only U.S.-based memory manufacturer, do you think they, like, Shay, you talk a lot about people with moats and monopolies, and you mentioned Samsung. Like, I mean, is this one in like your portfolio, or are you watching other players?
For me specifically, memory doesn't have a moat, but that doesn't mean it's a bad investment. Like, AI is just pulling all these names in a complete different orbit. For example, let's just talk about Micron specifically. I think that you just saw that clearly the hyperscale demand is still outrunning the wafer supply, and the pricing power has not cracked at all on the memory side of the business, because you just saw Micron guide up their margins 500 basis points quarter for quarter. And I think it's because the product mix is is changing. I think that's becoming more favorable on their end. They made a comment, I think, that 2026 HBM supply is now effectively sold out at their pricing. I think there is somewhat pricing power now all of a sudden, and a commodity of a space like memory that has never been there, because the demand for AI is just so insatiable. And the next breadcrumb I think I saw from Micron was cloud memory now makes up 40 or 50% of the sales, and that comes at a 59 or 60% gross margin. So this is clearly not a consumer-led bounce we're seeing in Micron. It's data centers. And I think that right now the universal tone is we don't have enough data centers. So if we're seeing this much of a bump on Micron's earnings right now at this stage, it's safe to assume that this might be lasting. The AI party for Micron might be lasting longer than expected, because we are nowhere close to the data center build out, and they are just already benefiting at this stage. So that was my read through. Yes, the market might be pulling back. Micron might be pulling back, but it went up from 100 to 160 in a matter of like a couple months. That's not a real, that's a big move for Micron. So it's just digesting.
Yeah. On the infrastructure angle, Sam Altman, who is not in prison for everyone at home, and not tweeting, but not in prison, is betting nearly $1 trillion that AI's future is going to be built in Texas. Texas is trending. We did an executive interview last week. I think it's coming out soon, with a gentleman whose family was in oil and gas for centuries, decades, like one of these Netflix shows. And he's like pivoted everything over to sort of these data centers and AI infrastructure. And it's just, Texas is a place to be. And so Sam Altman saying they're going to build out an $850 billion infrastructure expansion, the equivalent of 17 nuclear plants. And they're doing this alongside Oracle, NVIDIA, SoftBank. The demand and the push out west is really interesting to watch. You also see Lithium America is being talked about. And Tom, I'm curious your thoughts on that front. They're up, I think, over 70% in the pre-market, or were this morning, because the U.S. government was sort of sniffing around and indicating they might take a stake. So on the infrastructure side, I mean, either of those topics, Tom, what you tell investors right now, where do you think their attention's going and why?
Yeah, I mean, I think in general, the lithium story or nuclear, no matter where you look in kind of the energy space, people are betting on a massive need for it, and it's not going to come from it's not going to come all from one place. And so if we're going to have this energy diversification, solar is going to benefit, lithium is going to benefit, nuclear is going to benefit, oil and gas will benefit. And so people are just kind of picking their spots right now. I think over the last 6 months, we've seen a real uptick in, obviously nuclear has gone, kind of vertical. We're seeing solar energy, clean energy, wind energy, et cetera, kind of catch a bid. Those are starting to take a pause. And when I look at the energy markets, oil and gas, like those are starting to perk up again. And I'm starting to see people talk, especially about the integrated ones. These have a 3-4% dividend yield. They're sitting near all-time highs in many cases. And so people are saying, well, if this energy infrastructure trend is going to continue, the next phase of this would be these cheap, relatively cheap compared to some of the others, oil and gas names finally breaking out. And so people are looking for that. We haven't quite seen it yet, but in terms of the smaller cap space, yeah, I think this is going to continue, right? If you have a, material impact on kind of like energy infrastructure and you're small enough, either a larger company is going to take a stake or the US government might step in. So people are just looking at where, these companies are positioned and saying, okay, regardless of, what I think about this company's management or how they've done so far, like they've put enough pieces in place where they're important enough for somebody to come in and, get involved. I think we've seen a similar thing with Intel, right? We've talked about that one a long time. And, I was flagging that earlier this year about, this is kind of finding a floor at $20. And now it is at 30 because we've had significant investments from both the US government and NVIDIA. So, people are seeing what's happening with Intel and some of the other ones and saying, hey, if that could help, happen for a, multi tens of billions of dollar company, that might happen for, a smaller cap as well.
Yeah. I want to turn quickly to the crypto markets because we had a lot of crypto news yesterday. I think you might have seen Morgan Stanley announcing crypto would finally be coming to E-Trade soon. Guys, E-Trade's actually my brokerage. I feel like I need to confess this. It's random, but most of my stuff's in Morgan Stanley, and I'm like, I just want it in one place. So that's exciting for me.
Same here.
Really?
I use E-Trade as well. I used to be with Thinkorswim, but then they no longer supported solo 401ks, and I was an independent contractor at the time, and I was like, listen, got to be able to
cool.
have my 401k set up. So
yeah, it is because I worked at Public for a while, and so I've obviously using that heavily, and it's a very different experience than the Robinhood. Go ahead, Shay.
Can we talk about the fumble on Thinkorswim though, or just TD Ameritrade in general after that merger? What happened there? I mean, I used to use TD Ameritrade. I thought their UI was actually probably the middle ground between Robinhood's and like a traditional brokerage. And then they made that merger, and all of a sudden they overcomplicated it. They made it too engineering where it wasn't as consumer friendly. I heard Thinkorswim kept glitching, and like if they don't know like the audience, like even being offline for moments, it's extremely off-putting. And I think that you used to see a lot of screenshots even on TD Ameritrade because it was that clean. It was a very clean UI. All of a sudden, it looks hideous. It was tailored for boomers. And I think that just a huge fumble. I think Robinhood actually benefited a lot from the TD Ameritrade merger tax. And they also didn't add TD Ameritrade. They would not match the 401k contribution that Robinhood was even offering. And I was like, okay, so you just lost me now forever because it's a bitch to transfer brokerages.
Yeah.
It sucks.
It is.
So once I'm leaving, you're gonna have to offer a lot more than matching for me to come back. They don't get that. So I think it was a big fumble.
I mean, the ACATing out is a pain in the butt. And I don't, you guys at home, if you know this, you're looking to change up brokerages, like they'll pay you to move. They'll give you money to move your that's a thing that happens. Move this amount of money, we'll give you this much. So if you're in the market, shop around. You might be able to, add some to your portfolio for the pain of switching, because you're right, the switching costs are so annoying on that. But let's stick on crypto a bit. And like Tom, sentiment generally in the crypto community this week, we've seen some volatility there. What's the vibe check over on that side of the world?
Yeah, people are still generally bullish, but we're in a range bound market right now. I think, as we've been talking about, Ethereum really holds the key. We're stuck between 3,900 and 4,800. So that's the range we're in. Most people are betting that we will eventually break out, but I chatted with somebody yesterday, and I was just talking about crypto being a bit of a source of liquidity in this market right now. People are seeing other opportunities in the equity markets. They're seeing different AI stocks, different quantum stocks really moving. And so if you're sitting in crypto and you're using it as your risk asset to trade the market directionally, you've been kind of frustrated the last couple, 6 weeks or so. And so I think there's a rotation happening here. People are, getting out of some of their, trading assets on the crypto side and shifting to equities where there's some more volatility. But yeah, overall sentiment is still bullish. Retail still expects this to resolve to the upside and new all-time highs before the end of the year. It's just a matter of what that catalyst is going to be. I think there's, if SBF tweeting from jail can't get us to break out, I'm not sure what will. But
I feel like we need like an X competitor, like a Blue Sky, but like you can only have an account if you have like a rap sheet, and everyone else can follow them. Because you got Elizabeth Holmes too, just out there. I think she was like, "What should I have for dinner last night?" I'm like, "What are we doing?" Like, I mean,
isn't that like set up for them?
I don't know.
You have a choice.
I thought it was like I thought you were on a schedule, but I would join that. I would definitely join that platform.
Yeah,
It'd be very
I
interesting.
will. Oh, I thought you meant join them in jail. I was like, wait,
Oh
what?
no. Yeah,
You're like, heck yeah,
You know what?
scheduled dinner.
I'm sick of paying rent in New York. I would rather just go to jail with these guys and tweet. No, I would follow them on the platform. I don't have a rap sheet. I wouldn't be allowed in, but
Yeah,
maybe that's
there we
incentive.
go.
But it's continue to have just like weird things happening in the market. Let's talk about Eli Lilly. Going back to Texas real quick. I mean, Texas is like everything's Texas right now. They are building a $6.5 billion biomanufacturing campus in Houston, and it is primarily for their weight loss drug development. And so it's going to be a $25 billion long-term economic impact to the region. Houston was chosen over 300 global proposals. I keep seeing Texas everywhere, and I'm like, is there like a Texas trade? I don't know. Is this something you see, Tom? Like even like regionally, some of these Western states where I was like, okay, everything's happening there all of a sudden.
Yeah, I mean, I think there's just momentum, right? Like when you get local governments really incentivizing companies to come, and over the last 5-ish years, however long it's been, we've seen significant investment there. I mean, I guess Joe Rogan started it, right? He was like, I'm going to Austin, and everyone went to Austin. So I think there's just a inertia that's happening where, if you continue to see your competitors investing in these major areas, and it also encourages the local government or the state government to further incentivize things, right? If you can basically incentivize a company, know they're going to invest, and like it will pay for itself, you have basically unlimited funding to be able to go out and offer the next incentive. So again, I just think there's a lot of momentum and inertia happening here. And Texas is kind of geographically it's a large place, so there's a lot of space to be able to do things. I don't think you'd be building data centers here in New York City or Long Island, but maybe upstate New York. So I think there's a lot of factors happening here, but yeah, definitely seems like Texas is the place to be these days.
Yeah, Shy, would you move to Texas?
I'm looking to move right now of California. I would love to move to Texas, but I am one of two people in our partnership,
Yeah.
and I'm getting outvoted.
He's PR trained. Outvoted Texas or outvoted for leaving California?
Texas.
Okay.
I mean, I just went to Austin last week. I loved it. I know a lot of people who live in Austin.
Yeah.
There's so many benefits of moving there from California, especially. It's just like
Yeah.
no more ankle weights. It's like running a mile and you don't have ankle weights on anymore.
Yeah.
Moving from California to Texas. So I think,
Yeah.
yeah, I don't know.
What other states are on the short list?
Washington.
Ooh.
Washington, but probably Michigan. I kind of need to be closer to New York. I
Yeah.
go there way too much for work, and New York is one that if I'm moving to California, why would I move to New York? It's tomato essentially.
Right.
Michigan, my wife's family that I just married into, they have generations of Ann Arbor in them. Wolverine.
Oh,
So I was like, oh
okay.
yeah, I married into it. So let's maintain it.
Don't sleep on the Midwest. I love the
I love it.
Midwest.
Yeah. I went to
Yeah.
Indiana for a hot minute. So like I loved it. I
Oh,
experienced the seasons. It was great.
yeah. All right. Well, keep us posted on that. That's exciting.
Yeah, if you end up in Michigan, better pack a winter coat. It's
Yes, seriously,
the
dude.
winters I
Oh,
cannot do up there.
This beard is going to be down to here. Like, you guys don't even recognize me. I'll go full Jack Dorsey.
Oh my God. Oh my
Yeah, I feel
God.
like a lot of people that don't like either don't want to move to Texas or can or whatever, like Florida is where they end up. They're just like, you know
Yeah.
what, it's close enough. We got
I
some more
can't do
beaches
it.
and
There's
whatnot.
too many reptiles and like insects and things that are too big and too alive for me.
Yeah.
Plus the humidity. Let's go quickly to Alibaba. From insects to Alibaba. They are trending right now. A lot of people talking about them because they had an Apsara conference and they unveiled a partnership with, you guessed it, NVIDIA. And they're building a global expansion to their data center footprint. It's the most advanced AI models for them to date. Their shares are jumping a bit on this news. We've been talking about, China thematically and just in the technical side with some of our guests for the past few weeks and sort of seeing those names rotate. But that's a big investment in AI infrastructure to the conversations we've been having. Tom, China, like when Jake's on and Jeremy, we're talking about the China trades a lot and talk about, they're in Baidu, they're in others, and Baba. What does that look like right now in the community? Are people still swirling around that region generally?
Yeah, definitely. People are kind of kicking themselves in some instances. Like they feel like they missed out. A lot of people just use Baba as the China trade, and it's run quite a bit, and so they're like, "Crap, like I missed it." But there are a lot of other names, whether it be, I think Baidu moved a lot recently, but there's like 10 or 15 big names that are listed here in the U.S. Via ADRs that people trade China with. If you want an ETF, KWEB is the Chinese Internet ETF. MCHI is the general MSCI China ETF. These are the vehicles that people are looking, and they're hitting three-ish year highs at this point. And again, this is a global bull market. China has been one of the few markets that are not trading at all-time highs or not really trending higher, and that's changed over the last 6-8 weeks. So people are definitely in this trade. If they're not in already, they're looking for dips to buy. So I think this is a structural trend change where you've gone from a sideways market to an uptrend, and people are going to be looking for opportunities to get involved on dips.
Right. So many pockets and topics. And I
Yeah, it's
know,
hard to keep up with.
I
Like
know.
every day there's a new thing.
So much room for activities. Is that
Exactly.
Step
Yeah.
Brothers? Yeah, I think.
Yeah, Step Brothers.
Lots of room for activities. Thanks for that, Tom. That's helpful insight. Before we wrap, actually, Shy, I wanna circle back to how we kicked off the show because I'm curious what you thought about Matt. We had a CEO, quantum CEO. I'm curious what your thoughts were.
I mean, my vibe was he's an operator, and that's exactly what you want as in quantum computing, like early disruptor. I think the quantum space is so early. It's really important to invest in management. because if you're bullish on quantum and you pick the wrong name, Quantum Computing Inc., you then are just like holding the bag. It's like being bullish on the internet and you didn't choose Amazon or Google, you chose some other .com bust, and all of a sudden you're right in your thesis, you picked the wrong horse, type of thing. So I think that's he was great. I love to see it. I do agree with the sensory components. It feels like I haven't dug into it too much, but it feels like a safer vessel for quantum exposure because they're primarily targeting the DoD, like the defense side of the business. And I do think that's what's going to be carrying the theme for the next couple of years. It's not going to be consumers. We are so far away from the ChatGPT moment for consumers, like not even close. But doesn't mean there's a ton of money to be made on the B2B side, the sovereignty side, the defense side. There is so much money to be made on the defense side. And I think that the DoD budget is going to get more and more allocated towards a new secular growth themes, AI and quantum and space. So high tide raises all boats. And if you think Quantum Computing Inc. is worth $3 billion and Inflection is worth $2 billion, you're delusional. So I think that's why it's an interesting investment, in my opinion, just based on the valuation.
I love the name of Quantum Computing Inc. It's like, it's like the Acme in like Looney Tunes, kind of.
Look at what they did 3 years ago, the company, or 4 years ago. It was a beverage company.
What kind
I'm
of
pretty
beverage?
sure.
Oh
Let me
my
see.
God.
What was?
Wait, I feel like I've heard this. Yeah, there's some sort of lore with that.
They weren't a quantum computing company. That's why I know that for sure.
We should do a segment on companies that were one thing and are now something completely different. That would be really fun.
Well, it's like Blockbuster's having a SPAC now because they're going to be a quantum play. That's how ridiculous I think it was. Like,
oh my God. Yeah, well, I appreciated the convo with Matt. I thought he did a good job of demonstrating technical know-how, but also breaking it down in terms that were pretty digestible. I loved how he had the little prop there, because you're always like, what does this look like? What are they actually physically doing? So definitely go ahead.
He also had the most grounded response I've heard from a CEO about the quantum and like crypto debacle. Like, that was a very grounded response. And I think that it's a stretch, but like, I think when you ask complex questions of management, they provide an answer like that. It is somewhat relatable to other questions they probably tackle in that whole arena of quantum. It makes me feel much more safe. And like, this guy has a good head on his shoulder. Like, he actually gets it. He understands it. He knows where the puck's heading. He knows the ups and downs. And like, it makes me feel a lot more confident and competent about a management for that inflection.
Yeah. And that's why it's great when they come on our show. You know, they can talk to the people. We got a few minutes left now. Tom, you got some charts. We're gonna round out with some charts, things to show us, show and tell. Let's get into it.
Let's do it. I'm gonna be gone for next week, so I'll leave you guys with a couple setups.
Maybe forever if you jump out of a plane. Don't do that, by the way. We love your
Hopefully not. I'll wait until after the conference. That way I can at least fulfill my duties first.
Okay.
And then get my last email out and then be good to go. Okay, so let me oh man, such boomer energy. Window.
I've never shared anything from my screen on this show, and I don't intend to, because I just know.
There we go. All right. So one thing I want to flag is the industrial sector. If you're looking for kind of the next leg of upside in the market, it's probably going to come from here. This is all the aerospace and defense names, railroads, basically all of the kind of infrastructure plays that we're talking about will come back to industrials in some capacity. So Caterpillar in the Dow is making new all-time highs. So like, again, this is quietly broken out, and I think people are in on this trade already, but it's done nothing for the last 2 months and is now trying to have a fresh breakout. So that's one. Let me. Oh man, I keep
God,
big
Tom,
boomer energy here.
Do this.
Sorry guys.
You're the worst.
All right,
worst.
then we've
got
keep
track of your charts. Just kidding.
in the in the industrial space. One name that popped out is obviously NOC. We've got a clear breakout here. It's retesting its kind of breakout area near 550, 560. This is one that I think is leading the sector, right? It's already broken out compared to the sector, which is just getting started. So that's an interesting one. This
Right.
next one I had to look up, Republic Services Group. They actually do recycling of different various waste. I don't really know what that means, but all good.
It's a tough
It
job.
is
Someone's got to do it.
interesting. Yeah, Republic Services, RSG. This one's
Okay.
interesting. You're kind of buying the dip within a larger uptrend near 220 is support. So again, if you're looking for relative strength, if you're looking for opportunities outside of the ETF, these names are definitely interesting. And then the last one, I'll leave you with a railroad company,
Ooh.
because why not? So there's been a lot of consolidation in the space, but Norfolk Southern (NSC) is trying to break out here. So I don't know if we'll necessarily get this like right now, but I'd probably expect it to consolidate a bit and then break out. But again, I think of all the railroads, this looks to be the best of them. And if industrials are going to be strong, then this is definitely one to watch. So yeah, those are a
Right.
couple names that are on my radar. The community is kind of talking about industrials right now, but I think as the momentum reignites in the next couple weeks, we will see a lot more chatter about it.
I love it. We got quantum, we've got railroads, we got gold, we got Ethereum, we got a little bit of everything.
Yeah,
And
I always bring something a little different to the
yeah,
table.
I
Just to keep
appreciate
it
it. Yeah, you're
interesting.
like, I had to look up what this company did, but check this. It's great. We love it.
Yeah, it's
I know
recycling.
people love the like hidden gems out there because we all chase the same names, we follow the same things, but there's some really interesting things happening in the underbelly. So appreciate you doing the detective work for us, Tom. We will miss you on the show next week, but we'll see you at Stocktoberfest. And if you guys didn't get your ticket yet, you can do that at stocktoberfest.stocktwits.com. It's going to be epic. But with that, we'll let you guys go. We'll be back tomorrow morning, 9 a.m. Eastern, to wrap the week. Thank you for tuning in, and we'll see you next